this really kind of gets into the growth capital that we've invested at K&P over the history of the company. $42 billion effectively, $18.3 billion of expansions, $23.3 billion in acquisitions. So, we have over the entire course of history of the company have found a lot of ways to deploy capital, both off our existing footprint and new acquisitions. And I think that for those of you that were at the analyst conference, I think that you probably remember Rich's opening salvo, where he put the article up from 2002 that in the Wall Street Journal that talked about how we were way too big to grow, and it was going to be difficult for us to ever find ways to deploy an appropriate amount of capital to continue to grow. And that was obviously 12 years ago, and we've done a lot since then. But this really shows, obviously the majority of it's been in natural gas pipelines, but we continue to find places to deploy capital and to grow. So then you kind of say, well, that's great. You deploy a lot of capital, so how do you do with it? And this really kind of summarizes how we do with it. This shows effectively K&P returns on capital for capital invested. You'll see in the natural gas pipelines. And let me just pause for a second. We think about our long-term cost of capital at K&P effectively as 9%. Now, if you calculated it today, it'd probably be a little bit lower than that. But we think about our long-term cost of capital over a long period of time as 9%. And we start deploying capital usually effectively at 300 basis points above that. So when we look to deploy capital, whether it's an expansion, an acquisition, whatever, we look for a starting point of 12% unlevered IRR. And that is for the most secure type of investment, and it goes up from there. On the other end of the spectrum, when we look for expansions in oil production, we always target north of 20%. More often than not, we target mid-20s, but sometimes the low 20s. But it definitely needs a 2 handle at a minimum on the oil production front. But this shows, effectively 11.5% on the natural gas pipeline front, and that includes in it a leave behind from REX compared to what we were able to sell REX for in the FTC divestiture of the El Paso as part of the El Paso merger. Refined products 12.4%, terminals 12, CO2 26, and Kinder Morgan Canada 14. So on a blended basis, and all those are before you allocate G&A, but after you allocate G&A, you're effectively at 12.6, a 12% K&P ROI. So that's really, I think, indicative of our track record of deploying capital.